everyone, I'm Christine and welcome back to my channel. Today we're talking about something super important that's actually shaking up Singapore's property market, which is the latest changes to executive condominiums or EC. These aren't just the small tweaks, they're actually the big shift that affect both new homeowners and those who are looking to upgrade. If you're thinking about buying property, understanding these new rules is the key. Although I've actually spoke about it in my previous video, but today we're going to talk a little bit about the new rules for the EC. Why did the government make these changes? How did this impact you, especially if you are a second timer? And what opportunities are there and what should you do now? Let's jump straight into what the policy has changed. The government has introduced three main changes for these new EC projects launched from the 8th May onwards. And they are the longest stay MOP period. Previously, it's actually 5 years, which you can actually sell or rent it out. And now the minimum occupation period has actually increased to 10 years. This means that you need to live in your EC for a full 10 years before you can sell it to Singaporeans or PR or rent out the whole place. And if you want to sell it to any foreigners, you have to actually sell it after 15 years, which previously was 10 years. And the second changes is the first timer actually gets more priority because the developer now has to set aside 90% of the EC for the first timer for the whole 2 years after the launch. This is actually a huge jump from the previous 70% for the first 1 month. Definitely this is a great news for the first timers. Thirdly is the deferred payment scheme, which is the DPS. So the popular DPS, which allows buyer to pay a small 20% down payment and pay the rest after that when the project is ready, has been totally removed. This means that all the new EC buyer must use the normal payment scheme, which means you have to pay in stages as the building gets constructed. So why these big changes? The government has a few clear goals. First and most importantly is affordability. Well, like I mentioned before in my previous video, EC were created to be an affordable option for the middle income Singaporean family. But recently the prices has actually been increasing too high, too fast. So it's actually making it almost the same price or close to the private condominiums. By extending the MOP, which is from 5 years to 10 years, it gives the first timers more priority. And the government wants to keep this EC affordable to stop people from buying them just to make a quick profit. Second, these rules encourage people to live in their homes. With the longer MOP, it actually makes families think twice before they really commit. So in this way, it will actually be catering to people who are really considering to upgrade and stay in the place for a longer period, rather than actually to stay for a while and to actually make a quick profit. Now let's talk about the most important thing in this video, which is who benefits and who faces the new challenges. Well, the biggest winners are definitely the first-time EC buyers, because with 70% units now changed to 90% actually reserved for you for the first 2 years, it means your chances of getting a unit has actually shot up. This is definitely fantastic news for the young couples and families, making home ownership much more achievable and affordable. However, for the second timers and upgraders, things have gotten a little bit much more challenged. The increased first time quota 90% and the longer priority period 2 years means it's much harder for the second timers to buy the new EC directly from the developer. So under the new ruling, if you go for the balloting and after 10% is being hit, the second timer will actually have to wait for 2 years before they can actually buy the property again. So this means that they will probably have to actually look out for other alternatives. Or if they want to actually really wait for 2 years, by then, can I say not many units are left for them to choose. So let's do a math to see how many buyers are actually being affected. Based on the 4 recent EC launches, here's a quick look at the second timers who might not be able to get the EC. So over here, we actually have Aura of Tampines, which is about 760 units. So under the current rule, right, there's 30% that is actually set aside for our second timer. That actually works out to be about 228 units. With the new ruling, it actually drops to 76 second timers only. And after the preview, there's actually about 99 units left. So 1 month later, these second timers are eligible to buy. And in fact, these 99 units will actually snap out on a single day, mainly by the second timers. So if let's say it's actually under the new EC ruling, this means that 228 originally is actually now reduced to 76. There's actually 152 second timers that are actually not able to buy a unit. Plus the remaining 99 units that was actually sold after 1 month, there's actually a total of 251 second timers that actually are not able to buy anything with the new ruling. So secondly, for Auto Place, which is actually a total number of 600 units. With the current rule, right, 180 second timers are eligible to buy. With the new EC ruling, there's only 60 second-timers that are actually eligible to buy. The remaining units after the launch is about 283 units. So if these 283 units were taken up by the second-timer as well, there's actually a total number of 403 second-timers that will be affected under the new EC ruling. And then we have Coastal Cabana, which is actually 748 units. So with the new EC ruling, there will be actually about 424 second-timers that will also be affected. And lastly is Riviera Tampines, the last EC that was actually launched recently. Under the new ruling, there's actually only 57 second-timers that is eligible. And if you actually minus it out, you can see that there's actually going to be 191 second-timers that is going to be affected with the new rulings. So if you put all these numbers together, there's actually approximately about 1,269 second-timers that is actually not eligible to buy the EC with the new EC ruling. So where do these EC buyers go? They won't just disappear, because if they need to buy a place to stay, they have to buy somewhere, right? They can always buy the next 5 plots which is under the new ruling, where we have actually Senja, Woodlands, Sembawang and Minton. But if most of the second-timers are thinking the same way, do you think that there will be a huge demand that flows into these 5 plots of EC coming up? And do you think that the take-up rate will be very high? Imagine if you are the developer and you know that there's going to be a high surge over here. Do you think you'll be actually pricing it low or high? And for those buyers who actually still want to upgrade but cannot get an EC, they will start to look out for other options like the new launches in OCR, where the land bid price is similar or closer to EC, such as Tengah, which is almost 90% sold. And then we have Lentor Gardens that is actually going to be launched next month. And Dairy Farm Walk, high chance it will be launching next year as well, and Chencharu next year, and currently we have Nara Residences. You can see all these land bid prices are actually just slightly higher or very close to the EC prices, making this a very attractive alternatives for home buyers. Resale condo will also become a popular choice for those who can't wait 2 years for the new EC. So if the increase of the demand to the resale condo nearby, do you think the resale condo price will increase? I think you do have the answer. Here's the crucial part. Before the big wave of the buyers, especially second-timer who can't get the EC, fully enters the markets and potentially driving up the price, there's actually this window of opportunity to add. And you should explore these segments now to secure a preferred property before the prices increase. So here's my advice. For the first-timer, this is your golden chance to actually consider buying a property. Use the increased quota 90% to your advantage. Do your homework, know your budget, be ready when the new EC launched. For the upgraders or second-timer, re-evaluate your options. If you really want to have an EC, I would suggest that you can try for probably 2 launches for the last 5 plots of EC that's actually not affected by the new EC ruling. But if you can't get a unit in the next 2 launches probably, and you really need to upgrade or move, I will really encourage you to quickly explore the new launches in the OCR that I mentioned earlier, or private projects at a similar EC price point, and even the resale condo market now, before the increased demand pushes the price higher. Don't delay, plan out carefully. With DPS gone, it's super important to understand your cash flow for the progressive payment. Talk to a banker to check on your loan eligibility and work out your finances well. Do we need to sell our place for the down payment? Can we pay the installment while holding up our HDB? And lastly, think for a long term, because this 10 years MOP will make EC a big commitment. We have to make sure that the unit that you choose and the location fit into your family needs for the next 10 years. Navigating these changes can feel complicated, but you don't have to do it alone. If you have questions about how these policies affect your specific situation, or not sure which project meets your budget and timeline, feel free to contact me. My contact details are right here on the screen. Don't forget to share and subscribe to my channel for more property insights. Thank you for watching, and once again, I'm Christine, and see you soon.